Good day, traders. 1 minute mindset reset. Free cash Thursdays. Today we're talking about most breakouts fail, but not always. One of my mentors, you've heard me say this expression before, price is always in a box. And one of my mentors who I credit with largely with having probably one of the biggest impacts on me is Peter Brandt. Because Peter's approach to trading, 40 plus year veteran of classical charting, and asymmetrical risk reward, understanding geometrical range expansions and applying that. Even though Peter trades over daily, weekly, monthly time frames, the same principles apply because markets are fractal. The Turtles were a famous group of traders trained by Richard Dennis and Bill Eckhart, and their model was essentially trading as 20-day, 50-day, 55-day breakouts. And they were subject to taking many small losses because a lot of breakouts fail. Most breakouts will fail. Al Brooks talks about this. The market's always trying to break out. And that comes back to understanding peak formation. Our opening range sets the initial high-low for a new week. And that is our boundaries for our new daily or weekly high-low. That's a box. Then Tuesday can expand that range or break out and fail and pull back inside, and we can still have our initial balance. Day 1, day 2, day 3. Now, if you understand when price is in a box, you can have a 3-hour box, you can have a 3-session box, you can have a 3-day box, you can have a weekly box. We had gold, euro. A lot of those moves have started from the beginning of the week. A great question from a trader was can you have opening range and initial balance for monthly levels in the new year? And we talked about this. There's a couple of videos on that we made when the new year started, January, February, same sort of thing. We had opening range breakout in those charts, and the recent pullback on gold has come back to that breakout level. So everything's fractal, everything's the same. But coming back to understanding that if price is always in a box, and understanding 3-day setups, 3-session setups, and even going into the news. The news is important because you can have a thesis, but my whole approach is I wait for after the news. And there's some very important reasons why. Because number one, you can have wicks. News can be the beginning of a reversal or a large move if there's an explosive move. So we talk about first bounce, but we also know that once the news is done, if there's been no explosion or no huge move, or there's no evidence of a lot of volatility, we go right back to the original thesis. And if the thesis is a broken down market in gold, and that market has had an opening range breakout, pullback, and a continuation, we're now in a range expansion. I don't want to counter trend that move, because now we can be in a market that is moving in a 100 or a 200% expansion of a move. Paul Tudor Jones talks about almost getting wiped out, counter trending a range expansion early on in his career. He got into a market that went limit down against him, and all the traders around him knew that he was stuck. He eventually, over the course of a few days, was able to carve himself out of that position, but the market opened up limit down on him, I think 2 or 3 days in a row. So Peter Brandt talks about making the bulk of his money from 3 or 4 large trending trades. So his best dress list at the end of the year may have 10 or 12 chart formations that break out and continue to move. So breakout traders. Classical charting is breakout traders. The Turtles were breakout traders. As I said, a lot of the Turtles struggled because they had to take a lot of small losses. But what the Turtles did do is when they got into a move that started to go and trend and go into a range expansion, they would pyramid into winning trades. They would pile into winners. And when those markets continued to move in range expansions, they were responsible for the bulk of the majority of their profits for the year. Those big expansion commodity markets can tend to go on big runs. Whatever markets, the currencies, they can do the same. So the point that I want to kind of get across today is that As I mentioned yesterday, retail gets stuck in the whole idea of counter trending. One trader said to me today, so if I just buy breakouts of highs or lows, is that a good strategy? How do I even answer that? How do you even answer that? That is not, to me, like, that's so foreign to me. My approach, my objective is to identify a best trade candidate. So we're going to get trend trades. We're going to get reversal trades. And when you think about the box, that's why sometimes we'll get day 1, day 2, day 3, first red day, or day 1, day 2, day 3, first green day. But it still needs to set up in the session that I'm trading for a parabolic opportunity. Another great question from a trader was, what do you do if you take a loss? The whole idea with parabolics is that when you get a coiled market, it involves other time frame traders. Once you've broken daily, weekly levels, you now have other time frame traders in the market. If you are in a parabolic setup, even if it's a 3-session setup, if you're trading with the trend, and so traders get caught into this thing that they think they're trading with the trend, but on the bigger picture, that 3-push pattern or a 3-day setup may be counter trend to a larger time frame. And once they break those boundaries and it fails, now you have other time frame traders driving those moves. So when you're in a position that's a parabolic setup, even if it's wrong and it's struggling and not exploding, you can pretty much get out of that trade with either a small profit, very small loss, or break even. Because if you're, I scale into my positions. I never go full size. I'm always adding in. If it's starting to behave, I'll put a starter in. If it's accelerating, or if we have a large 3-day parabolic, I'm going to add into that trade as it's confirming. And I'm talking about, on the minute chart. So traders often see these 1-minute charts for entries and trade setups. And as I keep saying, it aligns with the larger, bigger picture. There's going to be session scalps that are just clean, really clean, easy trades for that session. They're not a 3-day parabolic. But when you get 3-day parabolics, I'm still going to try and enter in on the tightest time frame to manage my risk and be able to add size into a winner. So opening, like, some people have blown over some of these concepts like it's no big deal, and all they're looking for is buying lows and selling highs. They're stuck in this whole thing about counter trending. Opening range, Monday high low. Okay, if you're inside of Friday's range on a Monday, guess what? You still are inside. But that opening range gives you a thesis for either a 3-push pattern, a false break, right? So day 1, day 2, day 3. And I know people are still confused on the day count. So keep things really simple. Quit trying to just counter trend a market. Until you know exactly what you're looking for, just step back and be patient, because there's plenty. Like today, again, coming back to the concept of easy money. Easy money to me is not trying to predict. It's not trying to buy the low or sell the high and catch a move, because that's not scalable. It's really not scalable. What's scalable is when you get a coiled market that involves other time frame traders that's going to explode. Whether it's after the news for first bounce and continue for a range expansion, that's asymmetrical risk reward of 5, maybe 10, and in some cases 20 to 1. So there's huge opportunities, but you have to understand those little concepts that people aren't really grasping. Opening range, initial balance. If you're inside of a weekly low or a weekly high, that 3-day high-low boundary forms a box, a rectangle. Rectangles are what you can use as a geometrical range expansion for projected profit targets or for just high-low range trading. Hive week, day 1, day 2, day 3. So super powerful, super important. Again, if you grasp the parabolic side of things, you can manage your risk very tightly, but there are trades that should accelerate and follow through. Like today, a creeping trend market. Get very suspicious. The news did not have an explosive move or any huge wicks. Stick with the underlying thesis. There's a lot of weight behind those markets. That market just continued to fall, and I made it very clear today. Do not counter trend gold. And if you stick around long enough and you keep following gold, you're going to find out why. You don't have to trade it. Study it, because as I've said in the past, if you've had gold spank you, learn from it, because you can make a lot of money from gold, a lot of money. when you're patient and you understand. Don't counter trend. There's days that you don't want to counter trend, and there's days that you want to be in because it's in a range expansion and it's going to rip. It's going to rip and keep going. So there's opportunities there. The opportunities are not going to go away. They're going to continue. Nothing's going to change. I don't care if they change something later on. Who cares? Don't worry. Don't focus on stuff like that. Focus on mastering your craft. Tomorrow's day 3, Friday. We've already started in Asia. We have Fed at 11 a.m. New York time. There could be some moves in the first hour. Again, we saw an explosive short squeeze on gold last week on Friday news at 10 a.m. 2 hours, 2 full hours. We may see a consolidating market. We might see some volatility over the course of the day. And again, we may not see anything, and it may just be a good way to close the week. We've had some huge moves this week. Huge. And I know some traders have made a killing and some other traders have found it challenging. But there's opportunities that aren't going to stop. So focus on your best trade setups, traders. Remember, most breakouts fail. And the ones that don't, they can keep going. Learn to make money on the days that it's easy to make money. Don't fight the trend. Don't try to just counter trend. Understand the setups. Understand what you execute the best. First red day, first green day. If that's what you do, stick to that. Don't worry about the other stuff. But don't try to predict a market. Don't try to guess where a market might go. Look for the best instrument, the best setup on an instrument. And again, just stepping back. If you can't see something, give it a day. Maybe you're going to see it better. Look for coiled markets. Peak formation high, peak formation low, consolidation, explosion. Have a great day, traders, and may the markets go with you.